Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. It's the last day of July. Do you know where your trade deal is?
We're now just about 18 hours from the midnight deadline for higher country-specific tariffs to take effect.
The White House working on a flurry of agreements to stave off higher reciprocal tariffs. Treasury Secretary Scott Bessent joins us straight from a framework with China.
We met for 2 full days in Stockholm. The Chinese are tough negotiators. We're tough too. I believe that we have the makings of a deal.
And off a late-night 15% deal with South Korea.
They will buy a substantial amount of U.S. energy. They will make a substantial investment into the U.S., both from their sovereign resources and via private companies.
Legendary investor Mario Gabelli sees opportunity in the changes hitting the entertainment industry, from consolidations to cable spinoffs.
What is important now is to help Hollywood. We have to bring American creativity back. We have to bring the content and capability back.
The Federal Reserve stands pat on interest rates, with more dissenting votes than we've seen in 30-plus years. Plus, Microsoft, now worth $4 trillion, and Meta soar past Wall Street's expectations.
The guy in college, it's like, can meet more girls if I do this Facebook thing. And sales are now $47.5 billion.
It's Thursday, July 31st, 2025.
There's Andrew's expression. It's gotten progressively.
I don't even know what's going on anymore.
Befuddled.
A super-sized Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin.
Greetings and welcome to the Microsoft Fiscal Year 2025 Fourth Quarter Earnings Conference Call.
It was a very strong close to what was a record fiscal year for us. All up, Microsoft Cloud surpassed $168 billion in annual revenue, up 23%. The innovation and the speed of diffusion is unlike anything we have seen.
Microsoft reporting its fastest revenue growth in more than 3 years, driven by its Azure cloud business. Now, the company disclosing revenue from that segment for the first time, more than $75 billion for fiscal 2025, growth of 39%. It crushed the estimates of 30.4%. Now, the after-hours stock move boosting the company's market value above $4 trillion and into NVIDIA's territory. On the earnings call last night, CEO Satya Nadella said that Microsoft now has over 400 data centers across 70 regions. That's more than any other cloud provider. And he spoke about Microsoft's competitive edge.
We stood up more than 2 gigawatts of new capacity over the past 12 months alone, and we continue to scale our own data center capacity faster than any other competitor. Every Azure region is now AI first. All of our regions can now support liquid cooling, increasing the fungibility and the flexibility of our fleet. And we are driving and riding a set of compounding S-curves across silicon systems and models to continuously improve efficiency and performance for our customers.
Now, later on that call, CFO Amy Hood saying the demand continues to be higher than supply for data centers. Back in January in Davos, you remember that Satya Nadella said he was good for his $80 billion investment for this calendar year. If spending remains consistent for each quarter in the fiscal year, that total spending will now be $120 billion in fiscal 2026. That is up from what he committed to back during that interview at $80 billion. And the whole thing is a little mind-blowing.
Yep. Well, and the $4 trillion, only the second stock to move above that territory.
Meta's we're going to do now, and it's just eye-opening as well. Yeah. Check out the shares. That's easily an all-time high that we're seeing after the second quarter results. This is a guy in college. It's like, can meet more girls if I do this Facebook thing. And sales are now $47.5 billion. That was above expectations. Also, you make $18.3 billion in a period? Yes, you do. And for the first time recently, Zuckerberg kept to his idea that the high end of the capital spending projections, this is the first time he didn't bring those down. And that is allaying concerns that we've seen it before when maybe they misspent. I don't know. What was the last thing they thought was going to be great?
The metaverse.
The metaverse.
The thing that they overspent.
Hence the name Meta.
Yeah. Right.
But in this case, I mean,
the street wants them to spend more and more to stay in the front.
And they said, and they didn't take down the high end.
Yeah.
So that is helping it. As I said, that's an all-time high. The Facebook parent beat earnings and revenue, gave a strong current quarter sales forecast as well. AI continues to strengthen the company's core advertising business. Maybe really is already happening with AI at Meta, saying its goal is to bring super intelligence to the masses. On the earnings call, Zuckerberg said Meta is beginning to see glimpses of its AI systems improving themselves.
Whether we're building some new social product or this, something like Meta AI or a new product around this. We're going to work on getting to leading scale, building the highest quality product, focus on that for a few years, and then once we're really confident in that position, then we'll focus on ramping up the business around it.
So not much of a leap to where it goes from improving themselves to basically getting rid of us entirely at some point. Probably still a couple of years, but the company also raising the lower end of its annual capital expenses forecast. So not lowering the high end and raising the low end. Expects 2026 year-over-year expense growth rate to top this year's growth.
11.7%. Just big jumps, both from Meta and Microsoft this morning.
Yeah, a stock that's already, it's not Microsoft, obviously, but it's already, I mean, it's not $2 trillion, but it's getting close. It closed yesterday 1.5 trillion. So.
I don't know if you saw, this is separate but relates to all of this. So there was a story in The Information last night about the numbers that came out on OpenAI. So 700 million people are now weekly using ChatGPT. 500 million weekly active users. That's up from 500 million just in March. So think about 200 million more people since March. To me, that's what boggles the mind. And this thing is probably one of the most used now. It's like number 5 or 6 app. So what I wonder about this, though, is there a winner-take-all
Dan
piece of
Ives
this
doesn't
business?
think so. Dan Ives is long all of these things.
No, I understand that.
He doesn't think that it's winner-take-all. He doesn't think it's a zero-sum game with this, that more and more people are using it.
You see some of the jackets he wears. I mean, I just would take that with the greatest. Take that with the greatest.
So I happen to think that it's not really a network effect. It's what I call the memory effect. Means that you actually there's like a true lock-in. So if you
in terms of building the ecosystem, once you start using one,
once you start using one and it knows you, and it actually knows you,
it's better.
It gets better itself. And so you would never necessarily go to another one. And so the idea that, like, if you decide...
I have like 3 that I use right now, but...
Are you paying?
For one of them. Perplexity I pay for.
Okay. So
I don't pay for it.
So if you're not paying for anything, for the most part, you're not getting... But especially if you're paying for some of the upper end ones...
it's like $20 a month.
And you're actually using the memory feature.
Yep.
Totally different, by the way. The ChatGPT will feel different to you using memory. Well, once you do that, I think you say to yourself, okay, I can't go anywhere else.
I do want to give a shout out to ChatGPT with what they've done now with their new study mode. Love it. Absolutely love it, because instead of like just giving you the answer on thing, it tries to act as a tutor and say, okay, I'm not going to write this in, a paragraph with a couple of typos written at a 9th grade level. Yeah. Let's do it together and kind of write some of these things.
It's so early that all these things are a little bit disconcerting and a little bit, you just have to wonder. The big story, one of the big stories in the Journal today, entry-level jobs are done. There's none. They're using all AI.
Microsoft actually put out a list of the top 40 jobs most likely to get eaten by AI.
These are already gone. And they even talk about...
Broadcast was in the top. Broadcast news delivery was in the top.
This is for everything. This is college grads. They're already mad. I think they're going to start being mad at you too. They're mad at boomers. We ruined the world. Blah blah blah. Global war, whatever they're worried about. Now they're going to be mad at you guys. And
why?
Because of AI and because it's mostly this isn't us doing this stuff. getting rid of all the college jobs. This is mostly.
Well, the problem is anybody who already has a job maybe is a little safer if you've moved your way up into the echelons.
AI is
but
better.
Entry level is going to be really tough to get one.
AI is better than the 22-year-old college graduate at a lot of these tests. One of the companies dating app Grindr, go figure, is hiring more seasoned engineers. They can get more experienced people because they don't have to hire any of the
Where do you think you're
entry-level
going to get
people.
the next decade's experienced people if you don't give any of them
You hire them
jobs?
already experienced from somewhere else.
If you can't get an entry-level job, how do you get the experience? That's the
We're going to need UBI.
We're going to need training.
It's happening already.
We're going to need more training in
UBI for college students. They're college grads. Are you hearing this is happening?
Yeah.
What would you do if you were graduating?
I don't know. I have children that are going to have to go to college.
I am worried about
your children are set for life, my friend. They've already got UBI. They've got the Sorkin UBI.
Nobody wants that. You want to be a productive member of society.
I get it. I try not to, but I can't help it.
That's your own fault.
It is my fault. It is.
That is your own fault.
Why do we work hard if we can't give our kids everything, right?
No, we get up at 3:30? Incentive. I think about that a little bit.
Get up at 3:30 for a reason. I'm not going to, have a great
I thought it was come here and visit with us.
Yeah, exactly.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged.
Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year.
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table.
All right, the Fed holding interest rates steady, but the decision comes with some dissent. Our senior economics reporter, Steve Leisman, joins us right now from Washington. Steve, good morning.
Yeah, it wasn't Love Island at the Fed yesterday. Fed Chair Jay Powell and the fuller Federal Open Market Committee having two dissents there. But they made clear the September rate cut is not a done deal. And I asked Powell whether the Fed now has more clarity on the outlook because the administration has struck several trade deals.
The likely effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come.
That sentiment was echoed by the Fuller Committee, which said in the statement that uncertainty remains elevated. Remember, that was the one we talked about yesterday where there might have been some give. But the result was a fairly sizable move downward in the probabilities of rate cuts this year. September now at 44%. It was 68. October is where the market is now placing its bets for that first rate cut, now at 63%. And for a second cut, well, not December anymore. At least it's 46% now, had been 67. January more likely. So really only one cut fully priced in for this year by the markets. Two governors, Bowman and Waller, did dissent. That's the first time that's happened since 1993. Powell saying he respected the governor's arguments for a quarter-point cut now, but showed no sign of embracing them, at least not now. If the Fed had wanted a signal September rate cut, it knows how to do that. It didn't. At the same time, Powell did keep open the possibility of a cut if the data support it. A lot of data to come between now and that September meeting. Becky?
Hey, Steve, my takeaway from what Powell was doing in terms of trying to tamp down expectations was just that. He doesn't want the market to box them into a corner or to have some market decline in a big way if they don't cut rates in September.
Yeah, I mean, he can come back in September and say, look, the data did X, Y, and Z, and that warrants a cut. And I think the key here is how the tariff inflation shows up. The economy so far has only seen half of the tariffs that have already been enacted. And that's before all of the stuff yesterday that came through. So that didn't even count. They see that the effective tariff rate has been up 7%. They think it's going up 14%. So some people want to say, hey, we're out of the woods. We've already seen the tariff impact. The Goldman report and others I'm reading are saying there's more to come. Whether or not it creates broader inflation, that's not decided yet. But Powell feels like it's the Fed's job to keep it from becoming broader inflation.
Okay, Steve, thank you.
Pleasure.
Cheese will be next.
Still to come, the latest and late-night trade deals with Treasury Secretary Scott Bessent. Which handshakes have happened, and which countries are still at the negotiating table, like India?
I think that the president, the whole trade team's a bit frustrated with them. And also, India's been a large buyer of sanctioned Russian oil.
Plus, planning for a post-Jay Powell Federal Reserve. It looks like President Trump is in hiring mode.
There'll be 2 seats opening up. I'm putting together a list for the president, chief of staff to review. We'll be interviewing people. So, I would expect that we could have an announcement by the end of the year.
Squawk Pod will be right back. This is Squawk Pod from CNBC with Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Here's Becky.
President Trump announcing details of a new trade framework with South Korea. Megan Casella joins us right now with more on that. Megan, good morning.
Becky, good morning. Good morning, guys. Another preliminary deal announced, and again with a top 10 U.S. trading partner. So some top line details here. South Korea will offer a $350 billion investment fund, which President Trump says will be owned and controlled by the U.S. and that he will be the one directing the investments. He also says that Korea committed to $100 billion in LNG purchases, with potentially more investment to be announced in days to come. And in exchange, Trump will then impose tariffs of just 15% on all Korean exports to the U.S., including on cars. So it is a big win there for Korea's domestic auto industry. Now, South Korean officials have offered sort of tepid support for this deal. Its president described it as the country overcoming a major hurdle in striking the agreement, but the government also said that it would support companies in finding new markets. So they like that there's less uncertainty now, but they're also looking elsewhere. Officials also said that the investment fund would support the expansion of Korean companies in the U.S. market, including primarily in shipbuilding, as well as semiconductors, biotechnology, some other categories as well. So stepping back, guys, we're now just about 18 hours from the midnight deadline for higher country-specific tariffs to take effect. Those will impact more than 50 countries. This now is the 7th trade framework deal the president has announced. So you can see in all 7, countries are still seeing a minimum 10% tariff on their exports. Several of them are now committing hundreds of billions of dollars to secure rates of even 15%. So that does seem likely to be the new baseline tariff floor, but we do expect much more to come on this front today. We're still waiting for a number of executive orders to formalize all of this in writing. Guys?
Yeah, Megan, I think those are some of the questions, just the details that come down to this. It's really good to see a lot coming to the table, and maybe countries that are going to avoid some of the worst case scenarios if they didn't have a deal by tomorrow. But I think there's still a lot of questions about it. One of the ones that was kind of circulating today was this idea, like with Japan, the $550 billion that they were going to invest. The President Trump has said that is at his discretion where those investments will go. Japan later clarified and said these were loans, not investments that they were giving away on some of these. And so I think there's still some big questions in most of these talks, because it normally would take years to work out some of these deals.
Exactly. Major questions. And you're right to key in on the investments, because that's really what the White House has been celebrating the most. But that is also probably the most difficult to enforce. Japan says that they're loans. Korea says that, yes, the president will direct them, but they're also going to have a say. The EU this week, they supplied something like $1.3 trillion in investments, but they also said it's all going to be private. They're not doing anything as a government in order to incentivize it. So then you can't really commit that level of investment. You can promise it and say you're hoping that it comes, but you can't make sure that it is coming. The White House's response when I talked to them about this says, well, if countries don't follow through on the level of investment, then we're just going to raise tariffs back up again. That then makes you wonder how secure really are any of these framework deals, especially because as of yet, none of them are in writing, which makes none of them all that enforceable.
All right, Megan, thank you very much.
Joining us now for the latest on tariffs and trade on the eve of that August 1st trade deadline, President Trump says Treasury Secretary Scott Bessent. Mr. Secretary, always a pleasure to see you and have you on the show.
Morning, Joe.
We heard yesterday after we saw the EU and in Japan, we heard actually that South Korea, just to paraphrase, it might have been like, what about us? We're here. And then before we know it, we hear from South Korea. Is that typical? Are there other countries that have seen what's happening that are saying, we don't want to be the last country to make a deal with President Trump?
Well, look, we've got the August 1st deadline coming up, and as we mentioned before, the rates could boomerang back to the April 2nd level. South Korea was a special case because they had an election, a new government, so they were not in the position to fully negotiate. They came in yesterday afternoon. They presented a very good offer. President Trump moved the offer up a bit, and we reached a very good agreement where they will have 15% tariffs. They will buy a substantial amount of U.S. energy. They will make a substantial investment into the U.S., both from their sovereign resources and via private companies.
So that sounds like a template. It sounds very similar to some of the other recently announced deals. What will it do for us in terms of exports to South Korea?
We pulled down a lot of the trade barriers, a lot of the non-tariff trade barriers. So, obviously we'll be exporting a lot more energy to them, and then it will be better for our farmers, better for all of our exporters. As the South Koreans said, we like U.S. products, and now what we're seeing with President Trump is these tariff barriers and the non-tariff barriers, which are more difficult to quantify sometimes, are coming down. Jameson Greer, the USTR ambassador, has a book that looks like kind of 3 of the old New York City phone books that is a list of all the non-tariff barriers by country. They had been substantial. I believe with Indonesia, we marked out something like 11,000 lines of tariffs.
A lot was made of the president's comments about India. We were trying to figure it out exactly what, and it's obviously negotiating and leverage and everything else. And we've heard that we're close with India, and that's one of the majors, other than China, that are left. What was the president's intent yesterday with some of those comments about India? And do you expect something to happen before the deadline?
Well, I don't know what's going to happen. It'll be up to India. India came to the table early. They've been slow rolling things. So I think that the president, the whole trade team's a bit frustrated with them. And also, India's been a large buyer of sanctioned Russian oil that they then resell as refined products. So, they have not been a great global actor.
How about in China, some of that wrapped up? And we'd like to hear it from you exactly what the tone was. And we understand how complex a deal with China would involve and how many different myriad complex issues are involved. But where does it stand after the weekend or the last few days?
Yes, so we met for 2 full days in Stockholm. The Chinese are tough negotiators. We're tough too. It was led by the vice premier, my counterpart, Hu Feng, who I have great respect for. He is both a statesman, a tough negotiator, and very senior in the leadership. We pushed back on them quite a bit and made our positions known. I believe that we have the makings of a deal. They announced that we would have a 90-day roll, which was a bit premature. Ambassador Greer and myself will be speaking to President Trump today about whether we will be doing the roll by the August 12th deadline. There's still a few technical details to be worked out on the Chinese side. Between us, I'm confident that it will be done, but it's not 100% done.
Secretary Bessent, just in terms of the China negotiations, we had Leland Miller on earlier today. He does the China Beige Book report. He said that when you had the export controls that were put into these negotiations, and China forced that issue by throttling our exports to us of the rare earth minerals, that changed the leverage and gave China much more leverage in the situation.
The Chinese came to the table and said that they were putting a chokehold on rare earths and rare earth magnets, critical minerals, et cetera. This became part of the negotiation. All of a sudden, the U.S. side and the Chinese side were negotiating about supply chain choke points on both sides. The second this became a part of the negotiation, Chinese leverage went up dramatically because now they have a choke point over the United States economy, and in some ways, it's mutually assured destruction.
We heard this morning that China is asking questions now about NVIDIA's H20 chip and whether there are concerns, whether you can track those chips, and they want reassurances on that front. How much more complicated is the Chinese negotiation than it has been with any other country you've dealt with?
Well, one thing I'll tell you is that is a gross oversimplification from your previous guest. I didn't hear what he said, but I can tell you, they have used the rare earth magnets as a negotiating card, but we've got plenty of our own, and we at a point had 12 countermeasures on against them. They all national security based. We have dropped those. The magnets are flowing, and we'll see. But you've got the two largest economies in the world. And Becky, what we've never seen before in recent history is if you look back to the economic negotiations, 70s, 80s, even the 90s, you look at the Plaza Accord, the Louvre Accord, some of the big economic negotiations, even when the U.S. came off the gold standard in the 70s, we were negotiating with our allies. Our allies were our biggest economic rivals, and then there was the Soviet Union, who was our big military rival. They were a small economy, but a military powerhouse. Negotiating with China, we are negotiating both with our largest economic rival and our largest military rival. So you're right to say that this is, in a way, three-dimensional chess.
Mr. Secretary, one of the things we're all watching is the Treasury market. And China, of course, had been a massive buyer over the years of our treasuries. And I'm curious, as these negotiations continue over trade, and we start to see some of the numbers in terms of what they're buying or not buying, or frankly selling, how you think that could influence or change anything?
So, Andrew, really for most of the Asian economies, 2017 marked the high point of their ownership of U.S. Treasuries. We've seen a gradual decrease since then. The Treasury market really hasn't featured in any of these negotiations.
Mr. Secretary, I have a real specific question to ask you about some of the unintended maybe consequences of tariffs. Ford hasn't lost money in a quarter since 2023. They make almost all their cars here. Now they're doing, I think they're trying the best they can to have U.S. made vehicles, but they still import some parts. As a result, $800 million in tariffs pushed them into wiped out the profit entirely. Are there still carve-outs available? If a company like Ford comes to you and says, look, this is how this affected us, or comes to the president, this is a direct consequence of what's happening. That's not what was intended with the tariffs, was it? And it's not what we want, I don't think, to cause Ford to report a loss, even though they're trying their best to make all their cars here.
And look, I admire, Joe, I admire Ford. Ford, I believe, has the highest U.S. production of any auto manufacturer. I think that there were numerous circumstances with Ford. I believe that the Ford, F-150, 250, their big truck series is made out of aluminum instead of steel, which is different than other cars. So I think maybe the aluminum tariffs have hit them harder. we will be negotiating with Canada on those. So, I think with Ford, it's probably been idiosyncratic.
The number we got yesterday for GDP was above expectations. Great sounding number, 3%. But if you average it with the first quarter, many are pointing out it's about 1.2% average GDP growth, which is slower than in the last year. Obviously, the second half will tell the tale, and the big beautiful bill, a lot of those positives, some of the tailwinds for businesses probably aren't evident yet. But there is some, it looks like maybe some lessening of demand. One of the key drivers, I think, is final sales to private domestic purchasers. You probably are more familiar than I am with it. Slowest growth since 2022, and they're tying that to tariffs. I mean, there's a lot of long-term benefits, I think, the president and you see in tariffs. But near term, do you need some other things to kick in, maybe lower interest rates to offset some of the effects of the tariffs?
Well, Joe, maybe you should call the folks over on Constitution Avenue and tell them tell them what you're hearing. That wasn't what Chair Powell said in the press conference yesterday. And I think we have great momentum in the economy. Now that the tax bill is passed, there is great certainty. I think that there has been a big holdback in CapEx until companies were sure that they were going to get the 100% immediate expensing, and then they'll be getting, and that's permanent, they'll be getting 100% immediate expensing for factory structures and ag structures for the next 5 years. So, we're seeing a CapEx boom that started. I think it's going to really accelerate third, fourth quarter. Andrew and I were out in Sun Valley. A lot of the tech titans out there are talking about the continued AI acceleration, and we're expecting to see that productivity kick in the first or second quarter of next year. So I would expect that we are going to see an economic acceleration from here. And again, if I were the Fed, I would try to think a little about the 1990s Greenspan model, where you saw the productivity kick in from the previous decade's adoption cycle in office technology, in electronic technology. I think there's a good chance we could see a replay of the 1990s, and it's going to take a little bit of imagination, same way Alan Greenspan had.
With AI as well. One of the best things in the report yesterday, the PCE, 2.5%, that's almost where the Fed wants it to be. Versus previous 3.5%. So that's down. But you understand, Mr. Secretary, the more that the president or the administration crows about the strength of the economy, that just sort of gives, gives Jay Powell more rationale not to cut at this point. But when you throw in the PCE, along with maybe the average of the two quarters at 1.2, I think it makes it much more compelling. We had a couple of dissents. We haven't had two of them since 1993.
Well, I also think, I know Chair Powell said at the ECB annual conference in Portugal that the Fed would have been cutting if it weren't for tariffs. Joe, to your point, we haven't seen any inflation, and PCE is quite nascent. So I'm not sure what the case is here.
But at this point, you figure, when will we hear? That's a good one. So he makes it till May, Jay Powell. Let's assume that. It's not unusual to see an appointment announced, well before then. Do you have any idea on when we might hear what the president is thinking in terms of Chair Powell's replacement?
I do. I'm going to be.
Can you tell us?
I'm going to be. Sure, Joe. If you could just lean forward, I'll tell you a little.
That's Connie Chung, whispered in my ear. Yeah, that's right.
We are putting together a very good list of candidates. And remember, there are going to be 2 seats opening up. Governor Kugler will be leaving in, I can't remember whether it's January, February, Chair Powell in May. So there will be 2 seats opening up. I'm putting together a list for President, Chief of Staff to review. We'll be interviewing people. So I would expect that we could have an announcement by the end of the year.
Is Powell definitely leaving? Because even though his chairmanship is up, his seat, I think, extends a little longer.
Right. His seat extends for 2 years.
2 more years.
2 years. It would be highly unusual for a chair to stay on.
And you're helping with the search, obviously. We shouldn't read into it any like Dick Cheney type stuff, should we, Mr. Secretary? Look, Dick Cheney looking for a vice president, and then lo and behold.
As I keep saying,
you would serve.
He likes this job better.
He does. Yeah,
it says the food's better at the Fed, though.
He might be able to keep that job and have the other job.
The food is better at the Fed, and I can tell you the Treasury building. We run it very well. We keep it in good shape. We don't do any major building projects. We do things as needed, and it's a great historical building.
Mr. Secretary, I have one actually Fed question. Do you think that the Fed chair, because you do have to have the whole board kind of with you, could you imagine actually putting somebody in who has views that are otherwise different than the rest of the group and is therefore unable to effectuate the changes that perhaps the president would be pursuing?
I think, Andrew, that we want the person who's going to do what is best for the American people and for the economy. And as Joe said, we had the first 2 dissents for several decades. So it looks like there's already a schism in the board. So there would be 2 more voters. We would have a majority of the board, but of course then there are the regional governors who rotate their voting status.
Did people misunderstand that some of your comments and extrapolate it to Social Security, Mr. Secretary? Or was that actually something you're thinking about, the privatization?
No, it was ridiculous. I was giving an interview, and I was talking about the $1,000 baby bonds that every American citizen, every newborn is going to get. The Democrats hate this program because it brings capitalism and markets to every American, not just their constituents at the upper end. Over time, the compounding is going to be an incredible supplement to Social Security, not a replacement. It is a complement. And what I said was Social Security will continue as it is. Right. It is intact. Everyone will get their check every month. But it's very exciting to me that there could be a big payout at the end of when people turn 59 or 60 for the first time, Joe, because as you know, bottom 50% of households in America do not have financial assets, and President Trump is giving them financial assets. I believe that the reason you all have the mess you are about to have in New York, Caracas on the Hudson, is because people have given up on a market-based system. And the Trump administration is going to make every newborn a shareholder, and they are going to have a stake in the system. When you have a stake in the system, you do not want to bring down the system. So the power of compounding could mean a big payout that would be a complement, not a substitute for Social Security.
Oh yeah, that is horrifying.
Really interesting.
It is, and it is horrifying to some. If you're not beholden to the government, sort of undercuts a lot of one side's programs, doesn't it? If you're, that's horrifying. Mr. Secretary.
Well, Joe, the other thing too is I got to say, some of the senators who criticize me are the ones who take the most advantage of, they don't have insider trading rules. So Senator Wyden criticized me. He has he's a statistical aberration. Somehow he has made over 120% one year, over 70% the next year. If he were a private citizen, the SEC would be knocking on his door. Same with the Pelosi family. How does this happen?
That's a good point. It's a good point. Mr. Secretary, we appreciate all the time again that you've given us and hope to see you frequently as we did today. Thanks.
Good. Thank you.
Next on Squawk Pod, veteran media investor Mario Gabelli joins us. What he's watching in entertainment.
Netflix has got streaming. The world has changed. It's got a market cap greater than Comcast, greater than Disney, greater than Warner Brothers, greater than Paramount, greater than 3 or 4 of the other ones like Lion Studios, like AMC combined. So how do we compete and survive in that?
And Paramount's long road to its $8 billion merger with Skydance.
I have owned Paramount since Gulf and Western owned it. So I've been in it for 50 years. Just think about the next 20 years.
I think you should have sold it.
Yeah, has that been a mistake for you?
No.
A spirited discussion right after this. You're listening to Squawk Pod.
Stand by, Joe. His mic, here.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square.
All right, let's talk media, taxes, tariffs, sports investing, and much more. We've got billionaire and value investor Mario Gabelli with us. He is the chairman and CEO of Gamco Investors. And Mario, it's great to see you here this morning.
Well, it's indeed a privilege and fun to talk about our favorite subject, which is stocks, and the world of which volatility is part of the daily breakfast, lunch, and dinner for us.
There has not been a lot of volatility lately. It's been kind of an upward march.
I'm looking at specific stocks, the amount of transactions. For example, Flowserve had a deal to buy Chart, and it's being taken over for $210 in cash. And the shorts were in Flowserve because they were arbing it. And the Flowserve stock at $58.50 is down from $65, and it's a bargain. Scott Rowe's going to do a great job. And then you got a deal like Iveco in Italy that postponed their meeting till this week on Thursday, and speculation is they'll sell their defense business. And the stock is 18 euros, and we think it's worth 29. And if they do that, there's what will they do with the balance of the business? So there's a lot going on all the time.
I know it's probably not in your wheelhouse at the moment in terms of things you've been considering, but Union Pacific announcing this deal with Norfolk Southern, I mean, that's going to be one that does test the regulatory, I guess, how willing they are to allow bigger transactions to happen. What do you think happens there?
Well, that is a great start because the notion of the tax structure in place, so that now you can figure out what you can expense on R&D, what your depreciation bonuses are, what your other things are, that gives you a little more clarity. Secondly, the notion of some of these transactions getting approved quickly. Now, you have a new head of the Federal Communications Commission. Carr is saying, hey, we don't want the broadcasters to go the way of the newspapers. And he's going to be a lot quicker on making decisions. You're going to have Ferguson at the head of the Federal Trade Commission. The other one turned down a shoe company, and it caused it to have a disaster, Capri. Among others, like iRobot was 55 and it's now 5. Sports Warehouse was 15, it's now 3. So those individuals have moved on, and now you have that, and the changes also in the EU in terms of M&A. So I would think, I'm not going to say it's greater confidence, but when you look at the map, where is Burlington Northern, which is not on the East Coast? Where is Union Pacific? It's not on the East Coast. So what are the negatives to the shippers? And that's one issue. Clearly, you want to look at it, but it should not take 2 years.
Right. So you think there's going to be more deals? There already are more deals.
Yeah.
Things are percolating.
Not only that, you're going to have the private equity guys are stuck with, holdings, and they're laying them off to related parties and continuation funds, and now they would like to go more into the public domain or figure out another way to swap them. So you're going to see a lot more. And yeah.
Go ahead.
No, that's it. And then, we're going to see it in some other parts of the world as well.
Well, let's talk about media, because that's where you've always been a big investor. Paramount shares, voting shares of Paramount you owned, that deal getting approved. What do you think of it, and what do you think happens next with some of these other media companies?
Well, I thought somebody would ask me about Paramount. So I brought this, Andrew, for you.
Thank you.
You're welcome. What's important now?
Whip inflation now?
No, yeah, but that's an old. What's important now is our.
What's important? Okay.
That's my version. Whip inflation now was back in the 1970s. That was obviously important.
My mother told me about that period. Go ahead.
Yeah. You bought one of those expensive putters recently. Come on, that a private equity fund I just bought. Independent of that, what is important now? Netflix has got streaming. The world has changed. It's got a market cap greater than Comcast, greater than Disney, greater than Warner Brothers, greater than Paramount, greater than 3 or 4 of the other ones like Lion Studios, like AMC, combined. So how do we compete and survive in that? What is important now is to help Hollywood. We have to bring American creativity back. We have to bring the content and capability back. And that's what is going to happen with a combination of Redbird and Skydance. They will own 70% of a billion-share company. They'll have $10 billion of debt. Hopefully they can peel off some of the TV stations. So there's a lot to be done.
Do you think that company will ultimately buy and or merge with Warner Brothers, which just announced yesterday that it's going to be, it gave the new names, Warner Brothers and Discovery, but that would be something that you'd consider to be potentially an opportunity for them?
Look, think of Zaslav. He's going to take over what I call sports and streaming. He's put a new name on it last night, okay?
Discovery
Global.
I know he's got not Discovery. He's put it on Warner Brothers. And so, yes, the Zaslav, Variety came out and listed how many Emmys they got. 142. They got the highest number of anyone. So the notion of, and he's got Superman doing $500 million at the box office, domestic and global. And so content creativity, but then how to monetize it. And that's where he's going to be very strong. Now, will he try to buy that company? Let's look at Warner Brothers. They've got 2.5 billion shares. The stock is $32 billion market cap. They got 28. You got $60 billion. Compare that to Netflix with $400 billion. Maybe a little higher than that, $500 billion. How does he create value, and what is he going to do? Comcast is spinning off Versant, okay? And others are doing the same. Versant, sorry.
It's not French.
I got that French version. I can't
Think
get
of
rid
it
of
like
the French version.
The reason I'm asking the question about Warner Brothers is right now there's a question. You're going to have the Paramount deal that's going to close, right? So that's about to happen. And the question is right now, if you believe that the other ones that are up for grabs would be Warner Brothers, that would be one. You would think that Peacock, which would be, and NBC, which is part of this company. I don't know if you think that regulators would actually allow this company to do anything during this administration. That's an open question. Therefore, then you start to think to yourself, okay, there's sort of only 2 or 3 other options if you are David Ellison or you're David Zaslav.
The answer is go to Hollywood and start going back to basics. Give the consumer what they want, when they want it, at the lowest possible cost, and...
Well, I'm asking as an investor.
So neither a buyer nor a seller be, is that
That's what you do. That's the business.
Yeah, but I have owned Paramount since since Gulf and Western owned it. So I've been in it for 50 years. Just think about the next 20 years. Think about content. How do you create...
By the way, has that been a mistake for you?
What?
Yeah, has that been a mistake for you?
No, don't forget there was a time when the guy in 2002 shorted the stock and it ran to $90 and we were able to liquefy some and buy some back. We've been a long-term, we own 5 million of the 30 million shares of the voting stock, of the 10 million that are outstanding. We're going to have 0. We're not going to own any. He's cashing us out. It's the terms of trade that we object to.
No, I know. The reason I asked that is Joe was, I think, alluding to, you would have been happier selling those shares 5 years ago?
I did.
You're saying
I bought them back.
5 years ago?
Okay.
Well, no. Look, Tootsie Roll went from 30 to 60. Paramount went from like 30 to 80, back to 23. Today, I bought some today because I got until Thursday to make an election. You got to look at financial engineering. You got to say, hey, I have to elect. And everyone looking at this program has to make the election by Thursday of whether they own Paramount and whether they want to own the non-voting stock and how do they get the cash and elect to get the cash. And then they'll work on it again. But let's not get on that one.
Financial engineering is the process of either buying or selling stuff. Are you suggesting Zaslav should neither be a buyer nor a seller? Nor should
no. First step, unfortunately, it's going to take 3 or 4 months to get this spun off. Mm-hmm. Okay? So there are other companies doing that. Tegna and Store Broadcasting are in the broadcasting area. And when Brendan Carr lifts the cap, right now you can only have 39.5% footprint of the U.S. TV households. That's going to be lifted. Which companies are going to do that? Then will he allow, which as I think he just did, allowing you to own more than one TV station in major markets? But I have to get a better clarification.
Let me ask you a different question about Brendan Carr. Given what he did to Paramount, given what the administration has done with a number of these lawsuits against media companies, how do you as an investor feel about that?
Come on, here. Andrew, that's why I brought this for you, okay? Right. What is important now is the vitality of that industry for the American consumer and the benefit of Hollywood. But I'm saying
that Brendan Carr may not allow other deals to happen because they may have differences.
Well, that's your speculation. It's not mine.
But we saw it in practice. It's empirical that these deals were held up because of these things.
When he uses empirical, he's telling you a fact.
Warner Brothers, when Zaslav tried to buy it, it was held up by the previous regulators for at least 2 years. And that was a crushing time.
The world has changed. That. I'm saying that was not about.
That's fine. You don't believe the world has changed. I do.
I'm asking a different question. I'm asking, what did you think, for example, of this last go-round with 60 Minutes and CBS and the payments that were made?
What's the relevance of that? That's history.
That was shareholder money. You don't care about these things?
There's an old New York expression called bupkis. And let's deal with the relevant dynamics. Paramount has 650 million shares at $15. It's $10 billion market cap. They got $12 billion of debt.
Okay, so
what did you want it to do?
Fine.
To go the way of Capri?
And they'll save twice as much from canceling Colbert in a year that they spent on.
Well, that's irrelevant to me. The point is that you got to protect Hollywood.
It's very satisfying.
There's a bigger picture here of intellectual content coming out of Hollywood that you have. Paramount spends $18 billion on content. You wanted it to go down the sink if you didn't approve the deal? That should have been done months ago. It should have been done under the other persons that were running it. So, anyway, today, I want to talk about nat gas.
Before we get to that, though, Barry Diller has the idea. Barry Diller has come on and said that he thinks a lot of these assets are being discounted far too much. He thinks there's more value in the content than
legacy.
In the legacy content than is reflected in the market today. Do you agree with that?
Yes, you have to, because you can recycle content to do other things. And so if you have content that's been fully amortized on your balance sheet, how do I look at the financial statements? Amortization, like for example, Netflix will spend $20-odd billion on content, but they're only amortizing 18. Mm-hmm. Whereas last year, Zaslav at Warner's amortized it fully. What is Amazon doing spending $20-odd billion? What is Apple doing spending $20-odd billion? What after they learned from Formula One? And what will they want to have as content? So Lion Studios is an example of that. AMC, which The Walking Dead at $6 is an example of potential content. That's it. This is exciting. We have to save Hollywood.
From itself.
What?
From itself.
Oh, come on. This way when you guys go out to Sun Valley, you can talk to all these organizations and feel comfortable.
Add on top of that the sports parts of this. You've long been somebody who's believed in Churchill Downs. You've long believed in the Atlanta Braves. How does that fit into what you're seeing today?
Sports and live news are important fundamentals for the small TV broadcasters, whether it's Fox, which I like at $51 with $450 of earnings for a June 30th year, and then they'll have so you want to own sports. How do I play sports? Baseball. You all were kind enough 2 years ago to sign this, okay? And this here is the Atlanta Braves. The stock, unfortunately, I'm going to cuff this, 15 and 45. So they've had a challenge starting off the year. However, the stadium and the Battery Park, and it's worth over $60, and it's fun to own it. However, you also have Madison Square Garden Sports, which is basketball. The Knicks and the Rangers are worth $400 a share. What is Jimmy doing? Right now, he's focusing on Abu Dhabi and the Sphere. He'll do something else. There's 24 million shares. They own 100% of the vote. Of 4.5 million shares of super vote. Yeah. Then in addition to that, soccer. Next year, 12 months from now, you're going to have everybody talk about the World Cup. Yeah. So I want you to own Televisa. Grupo Televisa has the rights to the Latin American market. They are selling, the stock is $2.27. There's 535 million shares located in Mexico City. And then there's a public company called Dartmouth, somewhere in Rheinmetall, I'm pronouncing it wrong, in Germany. The stock sells for €2.80. It's worth about 10 euros. And that's a soccer team. So sports is exciting because it's content, and it's global content, and soccer goes global. Okay, Man U, for example, is selling at 17.25, and the Glazers still own control. And Radcliffe bought it at low 30s, and at 17, it's probably worth it. They've been uninspiring on the field, but they'll improve. Then on top of that, I can't avoid talking about a company in Buffalo, New York.
Would you buy the spinoff from Warner? Would you buy Versant?
First of all,
should they be buyers or sellers of the cable assets?
Lazarus is going to do a great job.
What's he going to do? Buyers? Is he going to consolidate?
No, but let's get the data out.
Let's get the what?
The data, the form. I want the financials. What is Comcast going to spin off? What's the debt? What's the P&L on a historical basis? What's the corporate cost? Once I get that, we'll put a microscope, and then we'll sit down with the management.
And tell them
what do you think of the split of Warner Brothers and Discovery?
I keep calling it Versant.
Versant, like conversant.
What do you think about the other business, the Discovery Global business, which is going to have a ton of debt on it?
The debt of the pro forma company is $28 billion.
Right.
Okay, because he's made some adjustments. I don't have the final debt figures because there was some buying and swapping of debt and restructuring it. I can't answer. I know what the debt's going to look like. Gunner's going to do a good job running it. Okay, and we'll see. There's time and motion in place. Right now, think about what...
just wait for the data.
Wait for the data. Stars. I'm an analyst.
You have a couple of utes.
You got to dig into the numbers, and that can happen in the next 60 to 90 days. They have, unfortunately, what you want, Andrew, is the regulatory environment to accelerate the time. You can't have a deal sitting out there for a year and a half in the content world, and then you have a strike. What's that thing? Screen Actors Guild, Writers Guild. What?
Just Andrew's expression. It's gotten progressively.
I don't even know what's going on anymore.
Befuddled.
Oh, come on. The answer is you know everything, and you're right. You're doing a great job, and you're asking the right questions. But I don't have the answers.
There you go. Now he's smiling.
Mario, thank you.
Well, we're always privileged to be here, talk about my National Fuel and Gas.
Yes,
which is an $85 stock, which is the way to play gas because they own 1,300,000 acres in Marcellus. Wow. Goodbye.
Goodbye. Thank you.
One more. You got 5 seconds.
Oh, come on. 5 seconds? I got so many I can do in 5 seconds.
And that is Squawk Pod for today. Thank you for listening. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. Or listen to this podcast anytime when you follow Squawk Pod wherever you like to get your podcasts. You won't miss a thing. The latest headlines, newsworthy interviews, existential crises. We put it all out there.
College grads, I think they're going to start being mad at you too. They're mad at boomers. We ruined the world, blah, blah, blah.
We'll meet you right back here tomorrow.
We are clear. Thanks, guys.